whispering? Oh, I just said, you know, we're doing some traveling. I'm in an Airbnb. Um, there's people asleep, and so I'm gonna have to be whispering today. But the info is still the same because we have a Fed meeting this week. You guys can hear me okay? Just let me know on YouTube if you guys can hear me. Put something in the chats. Are we alive? We good? He's with the wife and kids? No, no, Walter. No, no. No, no. Very, very single and just focused on, crushing it in trading, really just personal development, and obviously FX Summit, which is taking over the majority of the focus. So before we go ahead and start this live stream, ladies and gentlemen, two reminders. This stream is sponsored by the FX Summit Conference, the #1 conference for traders and investors and entrepreneurs and crypto lovers. So if you're involved in crypto, digital entrepreneurship, trading, investing, anything that has to do with digital marketplaces, this is the event for you. Come and get connected, get a full view of what the future looks like. fxsummit2024.com. Use promo code at ChartAddicts to get some discounted tickets to the FX Summit conference. Last reminder, the last NASDAQ masterclass to teach the strategy that we trade every single morning is going to be on August 26th. We had moved the date from July 23rd to August 26th. So if you guys signed up for that class, you're going to get extended access to the VIP membership. So you guys get into the Discord group and get around everyone who's graduated the class, has that informed perspective, and get around a group of people who know what they're doing and who are serious about their craft. ChartAddictsFX.com, promo code ChartAddicts, link in the description. Ladies and gentlemen, we're back. It's Fed meeting week. And this time, middle of the week, 2 p.m. on a Wednesday, as usual. Now, there's two very big events happening. Obviously, there's the Fed meeting, and we're not expecting any change to the interest rates this Fed meeting. But if you look at all the markets, if you look at the CME Fed Watch Index, which we use to basically gauge if interest rates are going to change, they're betting that there's going to be a rate cut in September. And so everyone's watching tomorrow for Jerome Powell's sentiment towards that rate cut. The Q&A is going to be centered around that. You're going to get 3 or 4 questions back to back. Are we going to get a rate cut in September? Europe is cutting. Canada just had their second consecutive rate cut. So the rate cutting cycle globally has started. And so the pressure is on for America. How long can we hold out? And that's going to be the main conversation tomorrow. We'll see what he says. Now, you guys know that markets are forward looking by about 6 months. So if we get some good news here, we have Trump coming in, and his priority is to lower interest rates and improve the economic conditions for businesses to thrive here. So that means in the next 6 months, we can expect markets to continue rising. Now, I want you guys to understand one thing. S&P 500 and NASDAQ are in a retracement cycle. So we might see further downside for right now. But because the markets are forward looking in the next 2, maybe 3 weeks, once Jerome Powell tells us, hey, very good chance we get a rate cut in September or maybe even November, that's when the markets are going to start to rally. So just because there's good news tomorrow doesn't mean we're going to get an immediate rally. The markets could be still in this retracement cycle. It's the summer. Most institutions are risk off. I'll explain a few things here at the very end if you guys are interested about how institutions really plan their sell-offs. It's really just based on volatility. So you look at the volatility index. If it's too high, the first-party sellers, which are like the pension funds, mutual funds, Fidelity, Schwab, they start to sell because they just want to be out of the game when there's high volatility. And then if there's a big enough sell-off, that's when you get the people trading on margin, all the derivative people, options, swaps, futures. You get the hedge funds, you get the risk parity funds, you get the high beta funds, people trying to beat the markets using high risk strategies. They all become net sellers. And so that's what drives the market to go even lower. And I think that we're kind of in one of those right now. As soon as retail is basically just crushed from buying every dip, and just ready to start selling, that's when we typically reach a bottom. So your capitulation is someone else's entry. You can take that one to the bank. So there's two very important events. Number one is the Fed meeting. Number two is the Bank of Japan. Now, the Bank of Japan news is way bigger than the Fed news. Bank of Japan has been on a policy for the last 4, maybe 5 years, where their demographics, where their people they have a savings related culture. So instead of going out and investing, if you give out stimulus checks, instead of here where people are consumption focused, they're just going to save the money. And so what they had to do was basically make interest rates negative compared to other currencies. And they basically had to make interest rates zero for the banks so they can lend out money and get some stimulation going. It didn't work. So in order for them to avoid a government collapse, they had to issue bonds, which is when the government basically makes up these random things. And then they had to buy back their own bonds to make it look like their government is still in business. All right. So they printed their currency, basically making it useless, devaluing the yen in order to prop up their bond market. And this is a choice they had to make, save the bond market or save the currency. And they chose to sacrifice the currency. This has been a 5-year thing. And now all of a sudden, they're talking about maybe turning the entire tide around. Now, if you guys want to look at what happened in 2022 when the Fed changed their 14-year policy, just go out to 2022. And we'll go up to the weekly here. Damn, I'm on that Jensen Mike Pineda time frame right now. What is happening right now? Oh, okay, here we go. My bad, Mike. I know it's late. Good to see you on the call. All right, so we have this massive bull run that happened after COVID because we printed a record amount of money. And then as soon as the Fed changed their 14-year policy of just easy money, 0% interest rates, this is the date that it happened. Right on January 1st was the turn of the market, and we turned around. And this happened for an entire year from January 1st, 2022 to January 1st. Here we go. January 1st, 2023, the bottom of the market, exactly 12 months. So when the Fed or when any central bank changes a long-term policy kind of framework, that's when you get these massive shifts. So I don't trade currencies that often, but when I do, it's got to be swing trades based on these types of moves, because then you can go long USD JPY, you can go long Euro JPY, and then you can short Euro USD. For me, I live in America. It's easiest for me to keep track of the dollar. That's why I mostly trade dollar denominated currency pairs. But I don't day trade them because it's too slow for my personality type. I need that shit to move. So I don't day trade them, but I will swing trade if there's a big enough central bank divergence or central bank shift that's happening. This explains why the markets look crazy when I went back to backtest. Yeah, first off, the summer has its own volatility. And second, because of the election, the summer, all the volatility that's happening, the VIX index reaching 18 last week, which is relatively high for the VIX. When volatility is that high, major institutions just want to be on the sideline. So day traders always think they're smarter than the market, so they'll try to make money on these moves. But the institutions know if I get my ass on the sideline and wait for the real dip, not like the retail dip, like the real dip, then I can just save myself a lot of headache and I can just pile back in at a very good price. So we can't try to outsmart markets. But during the summer, there is a lot of selling off just for folks to get on the sidelines. And I think that's why risky assets like NASDAQ, which are sort of long-term bets on high risk tech stocks, people are like, all right, we've had enough. We're at the high of the market. I don't know how much higher we can really go. Let me get on the sidelines. And that's what we're seeing. So Bank of Japan, Tuesday, very important news. We have obviously, well, ADP, not that important. FOMC on Wednesday. Okay. Looks like Monday, pretty dry, no high impact news. And so we'll really just be looking for later in the week. Now, before we get into technicals, I'm going to kind of breeze through the technicals, but I want to explain kind of where we are in the economic cycle. So during COVID, we had this massive dip. Okay, let's call this COVID. And I'll be able to demonstrate this on either the DXY or the NASDAQ, but it's late AF. And so just bear with me here. You can go back test this for yourself. Okay, I've gotten 5 missed calls since I've been on here. Oh, it's 9:40. I'm not that popular, people. It's either the house is on fire or there's an opportunity knocking. So let's just call this COVID. During COVID, we printed a record amount of money. So 34% of all the dollars in circulation today were printed during COVID in 2020. So we have a 100-year history of the dollar. And then since Bretton Woods, which is the agreement and the committee that basically made the dollar the global reserve currency, we got off the gold standard. We've had a very long history of the dollar. Now, in the span of the last 4 years, we've printed 34% of the total dollar supply. So they're essentially debasing the currency, basically devaluing the value of the currency about 15% a year at this point. So when people complain about Bidenomics, Bidenomics is the policy of continuing to print money during an inflation crisis, even after we've already recovered from COVID. And that's what's caused a lot of the inflation. So we've basically just upped the stakes and upped the game. So this is how things happen. Now, we've reached a pretty high point in the cycle. Venture capital, equity investments, these large movements of money that invest in new companies and existing companies that drive the economy, they have a lot of money on the sidelines. They're looking at this, the prices here for Google and Nvidia and Tesla, and they're saying these are pretty high prices. And so I think there's a general sentiment of we don't know how much longer the market has to go. No one really wants to keep piling in money this high into the cycle. And I think that there's a general sell-off that just needs to happen. And there's air coming out of the markets. Now, the reason this is not going to last is because when you look at the global rate cutting cycle, Canada, the Bank of Canada and the ECB starting to cut rates despite them usually following the Fed. The Fed typically cuts rates first and then everybody else follows. But this time around, they didn't wait for the Fed. They started cutting rates. Canada's already cut rates twice. The ECB probably had a backdoor conversation with the Fed and they're holding off until the Fed makes their move. But it seems like a lot of economies are hurting around the world and can't wait for the Fed to start cutting. And month over month, they're going to put pressure on Jerome Powell. And by they, I mean the central bankers, the global central bankers. So the head of the ECB, the head of the Bank of England, the head of the Bank of Canada, and to tell the Fed to start cutting rates so that it doesn't put too much pressure on global trade. And so because the rest of the world is hurting, they're going to start cutting. And this for the first time ever, instead of the Fed making the first move and the rest of the world has to follow, they might force the Fed's hand and force them to start cutting rates early. So that's why I think that we're going to have a little bit of a dip, maybe 2, 3 weeks, maybe even less. And then we're going to see a massive, massive recovery because we know rate cuts are coming. That's going to alleviate some pressure on the economy. We know that even though people are saying that AI is dead and whatever, the bubble burst, yes, but this is the start of a very, very big run for the US. So just to sum it all up, we're in a retracement. It's going to rebound. There's a lot of good things going for us, but this thing could last a little bit longer than we would like, longer than just a couple more days, maybe just a week, 2 weeks, maybe even 3. So everybody clear? Put something in the chats if you're still awake and if that made sense. I know I covered a few too many things, but y'all already know the wave, we gotta cover our bases and we gotta be accurate here. I think he'll hold off on the rate cut talk and save it for the Hall Symposium meeting. So August 24th, so what he's referring to is every single year, there's the Jackson Hole Symposium, which is a financial conference that typically is a bigger market mover than the Fed meetings. So Jackson Hole 2022 is what really, really drove the second leg of that market drop. But I don't think he can avoid talking about the September rate cuts because the Q&A portion, every question is going to be centered around that. I say this every time when we're watching live. There'll be some young reporter and they'll hit him with a very good question. And I'll always bring it up. And I'm like, this is a solid, solid point because they're putting pressure on him. I can almost guarantee you at least 3 questions tomorrow, whether we're going to get September cuts He's going to dodge the first one. The next person is going to try to reword it. He's going to fumble it. And the third person is going to try to pin him down on a specific date. And Powell is too skilled and he's going to judo his way out of it. But you get Jerome Powell tired enough and you throw enough questions at him, he'll slip. The the reason I don't think Jackson Hole's going to be a big mover is because after 2022, when they saw what happened, the big market reaction after he said we're going to start cutting rates in 23, I think they're very calculated now about what Jerome Powell's allowed to say at that symposium. Just like at the Fed meetings where he reads off that binder, he's going to be the same thing at the symposium. So I think they're learning year after year what is causing these big market reactions. And their only two solutions are don't fuck up and read off the book, or the second solution is feed the news early, let the market react early, so that way when you drop the news, there's no adverse reaction. And I like that second one. I think that's been the global sort of playbook. Drop the news, say, hey, we're thinking about cutting rates, whatever, let the market react. And then when you actually drop the news, you're not going to have, you know, this big thing. Christine, what's up? I saw you have a question. We're about to get into technicals here, so just bear with us, folks.
Oh no, I put it in the chat. I said, what does this mean for your analysis for the next 2 weeks? Will you be looking to sell or will you be looking to sit on the sidelines until we turn bullish?
No, I don't sit on sidelines. I think it's a missed opportunity. So the market has retraced, and I'm looking at discounted prices, and I'm just going to buy discounted prices. So just like we talked about in the masterclass, okay, you have this larger range where this is the low and this is the high. All right, and then you have the smaller ranges. So over here, you have your own range, and so here's the area where I'm looking at. You can make money buying here all day. Now, if it does want to continue lower, you'll make enough money that the one time that the trade doesn't go your way, you'll be fine. But at each discounted price on the way down, I will be looking to buy because at some point it will turn around and we'll be in at the bottom. And it's going to be a nasty recovery. Christine, did that answer your question?
For
So
now.
for now, we're trading this smaller time frame model, this lower time frame model. Okay, and so type this in the chat just for because we're also on YouTube. But if we're here, am I buying here or where am I buying? And you can type this up in the chat. We'll do A. Neutrality will be B. Then we'll do C here. Am I buying at C or where am I buying? Mike, bruh, you're that kid in the class when I say, make sure you raise your hand, don't yell out the answer. The buddy's like, oh, I got the answer. God damn it, Mike. You want to teach the class? Is this what you want to do? You want to step up here and just take my job? Just go ahead and fucking step up here and you can teach the class because obviously that's what you want to do. All right, all jokes. All right, I'm glad you guys got the answer right. So, Christine, you see what I'm trying to say? Like on the higher time frame, we're at the bottom of a daily range, and then on the lower time frames, we're at the bottom of this lower time frame range. And so the trade from last week that I had put up in the chats here, in when on Friday, I believe, there was the 127 extension, which was right here, and I was expecting that turnaround, retest, and go up. So we had 127 extension, turnaround. It came back to that entry, which was 19 flat, and then at this point, there's really no trade for us, because if the market does break above, we'll have to wait for that correction. So what I would want to see is just a pull back to the bottom of the range, and then we can continue to go long. Look at the higher time frame trend. All of you guys that are maybe following people on socials that are bearish on indices because they have a fundamental bias, just keep in mind that the higher time frame trend is king. And as long as you have, by definition, higher lows and higher highs, the bullish trend is still intact. And so every massive correction that you see on the higher time frames is a dip, an opportunity to go long. If this is one of these like big corrections, what you'll typically see is this distribution model. And distribution is basically where the market is giving back all this liquidity. And it's not going to happen in this typical fashion where you have a flag retracement. It'll happen where you have a big release, then you have a false flag where it convinces buyers that it's going to go back up, a lower high, lower high. So you see the body of the candles, lower high, and then you'll have a release. So even if the market is bearish on the higher time frames, we can still trade this lower time frame retrace or this lower time frame, my ass. We're on the weekly, right? So we can still trade this retracement up all week. And then if it wants to reverse, this is going to be a Friday leakage. And then by that point, we've already made our money and walked away and not going to give it back on Friday, right? So regardless, we look at areas of structure like this local support. That's our low to high. Chart Addicts members, what fib is that? If I just go to this break right here and I do body to wick and I look at where this wick just rejected and I'm looking at where this retracement is likely to be, what fib is like, it's not fucking playing, bro. So that's model 2. Model 3 is model 3 is right here. That's where you get that. Okay. Big surprise on what fib that is, right? We don't use fibs, my ass, if you're watching this. All right. So that's the model 2. And yeah. Now, the worst case scenario, I do want to point you guys to one thing that I want you to keep your eye on. So you guys know when we have a continuation model. So let's say like we were trying to sell this one right here. Okay. So you would draw your bearish fib from the top of that range to the bottom. Let me clear up all these extra fibs, but this is too much. Okay, so I gotta go body to wick. That's why we do body, people. That's why we do body. Okay, so you had that perfect TP1 rejection straight up to the top. Okay, so when we see a continuation model, where are we looking for the retest? Oh no. Oh no. Oh no, 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 no. Right? So there's a worst case scenario here with this higher time frame impulse where we haven't seen more than a 2% correction in over 365 days. Shout out to who was it? I think it was Goldman Sachs that put that out this morning. We haven't seen a more than a 2% correction in NASDAQ for over 365 days, which is ridiculous. Okay, so could this big ass bearish or bullish impulse and this bullish run that we've been seeing finally retrace back below the 16,000? I think so, people. I fear so. So we're going to trade the lower time frame until that happens. If the market keeps leaking, we'll trade this lower time frame. And if that keeps leaking, then guess what? When in doubt, zoom out. We got a playbook. Pay yourself, don't play yourself. Get your money up, not your funny up. ChartAddictsFX.com. Take the live NASDAQ masterclass. Just do yourself a favor. All right. Now, one thing that Jerome Powell is very likely to get asked tomorrow, and this is going to be probably the main topic of conversation besides the September rate cuts and obviously the GDP report from last week, is how do you trade NASDAQ 100? Well, head over to chartaddictsfx.com, NASDAQ 100 Masterclass, the last one that we're doing for the year. Use promo code ChartAddicts. See you there. All right. Now, in all seriousness, NASDAQ pretty straightforward. We have a weekly range. If we break out, we look for the continuation model. If it stays in the range, perfect. We look for the discount. Quick fib, bottom to top, easy money. All right. If you don't know what I'm saying, this is masterclass stuff. This is not for you. All right. Now, shout out to the market respecting all the levels of the indicator. I'm not going to do the thing that I normally do where I promote the super secret magnet indicator, undefeated, undisputed, can't find it anywhere else except for the Chart Addicts live streams. I'm not going to do that today. But what I will do is show you guys how respectfully the market made it all the way through the magnet zone. Very strong magnet, right? This is the one from Breaking Bad where they had it in the truck. This one was a little bit too strong. It pulled it through. Then we had to pull back, and then all of a sudden we're using the first magnet zone. You guys remember when we bought down here, and then we took profits up here at the first magnet zone? Yeah, and then it became support. Yeah, it just came back to retest it, body right there. Look at the fib work right here. Here's the bottom of the range. Here's the top of the range. Market dropped, retested the 38 fib. Oh, fibs don't work. You don't work. Excuse me. All right. Hit the magnet zone. Perfect rejection. All right. Respected that zone like you just met your girlfriend's dad for the first time. You understand? Just nothing but manners. You feel me? And then the 61 zone respected on the way down. So I think we can actually see a full correction down to this level of this range. And Chart Addicts members, you already know what to do. Bottom of this impulse to the top, super secret magnet indicator can't lie. Extension level right here is the same zone. For those of you guys paying attention, 2312 entry if it does continue bleeding. 2312 entry if it does continue bleeding. 2312 entry if it does continue bleeding. Now, if you just told yourself, damn, bro, I get it. Good. Next week, you won't forget it. Okay, you're welcome. So if the market continues to drop, when in doubt, zoom out. You already know the zone. That's what we've got. Okay. Um, all right. Jerome Powell also said, did I have a drink or two at dinner? Probably. All right. Let's just go ahead and how about my business is my business, your business is your business. We respect each other the way that we have that mutual respect. All right. How about that? How about how about Bitcoin? So, ladies and gentlemen, last or this weekend, there was 2 days of the Bitcoin conference. They had speakers like RFK, they had Edward Snowden, they had Donald Trump come and speak at the Bitcoin conference. And so, shout out to Bitcoin conference. They usually host their event every year at the Miami Beach Convention Center, same venue we hosted the FX Summit conference. Trump gave by far the most bullish speech I've ever heard from a politician. So the majority of the conference was actually centered around politics, which I think is a big conversation because America has basically kicked out all crypto innovation by making it too obscure, and the rules are not clear enough for crypto companies to build here without fearing, the SEC stepping in on any given day and just shutting down your operations and putting you in a hole. So Trump said that under his administration, he was reading off the prompter, but whoever wrote that, they knew what they were doing. He said Bitcoin will go to the moon. Under my administration, they tell me Bitcoin will fly to the moon. And I could see Trump's face was shocked when he was reading the stats off the board when he said that it's like when the day he took office to the day he left, Bitcoin was up 3,900%. And as he was reading it, I could see his face go, "Oh shit, what?" He said, "I did that?" No, no, let's be completely real. He did to an extent, which is opening the floodgates to innovation does drive a lot of liquidity in crypto, and then also lowering the corporate tax rates. And then you add the crypto stimulus on top, or the COVID stimulus, excuse me, on top. Yeah, Bitcoin boomed. And it did more than just go to 39K. He was saying from the start to finish, it's like if you look at the peak of his administration, it hit around 70 grand. So he said that he's going to allow crypto innovation to come back to the States, which is one of the best things that we've ever heard. The reason we're going to Dubai this year is because America has basically made it impossible for startups to build here, whether it's Forex, crypto, anything, because not only it's not because they've made regulations to make it illegal, it's because they've made the rules so shady and obscure that you'll be following the rules, and then on any given day, they'll be like, yeah, we just changed this one thing. Can't do it. And that's why Coinbase sued the SEC, which is nuts, right? It's like suing the IRS. Uh, Good luck. So, anyways, we're seeing a massive rebound here in crypto, especially during that speech. We can see like a live reaction. And I do see crypto kind of extending a little bit past all-time highs. Now, here's the difference between retail investors and institutions. The higher the price climbs, what are most of you guys thinking watching this? Oh shit, I should have bought more Bitcoin. Damn, maybe I should buy some now. Oh, I got to get more Bitcoin, right? What's an institutional investor thinking? Great. Retail is pumping the shit out of this, buying it at these expensive prices. I finally have enough exit liquidity to get out because I can't find enough people to buy $100 million of my Bitcoin on an average day. But now that there's some news around it, perfect chance for me to get out and put some cash on the sidelines. At least that's what I would be thinking. All right. So the difference between retail and institutions is as the price climbs, retail chases momentum and institutions use that momentum as exit liquidity. And then as the market starts to drop, retail traders start to capitulate and start to sell off. And as soon as the capitulation happens, institutions buy the dip. If you just paid attention to what I said, you will be successful in markets for the rest of your life. If you just ignored what I said, then you shouldn't have got on the stream in the first place and you played yourself. And now I was going to say some disrespectful shit. No, it's a Sunday. We'll keep it cordial. Roy, I love you, brother. AJ, I don't know who you are, but I love you too, man. Hope you're doing great. Okay. Even with the BOJ does decide to do a rate hike, won't it take a little while for us to start seeing bullish movement for the yen? No. When you have a policy that's this, so consensus is something that's very rare in markets nowadays, which is when everybody agrees on the same thing. Going into this year, there was a consensus of 5 to 7 rate cuts this year. That shit went away pretty quick. All right, so the entire world agrees on two things. Number one is that the yen, just based on like mechanics, when you print your currency to buy your own bonds just to prop up your economy, just to make it look like your government's alive, that's not good for your currency. The rest of the central banks are looking at the yen like it's monopoly money because they just keep printing it more and more and more because they can't allow their bond market to collapse. No one's buying Japanese debt the same rate they used to. So because this is such a consensus policy and it's been so long of them doing this and no one expects them to shift, not even myself, and I'm a very contrarian thinker in my opinion. That's why this is such a major deal. If they do decide to hike interest rates or make any move, it's like that big, like, it's like that 100-year-old sea turtle that hasn't moved in 10 years, just finally like lifted its leg and the whole world's losing their mind. It's kind of like that. Like in a mechanical sense, it doesn't have a real impact, especially when the rest of the world is starting to cut. If anything, it's going to, is really not going to have the impact that they think it's going to have. But in terms of sentiment, which is really what drives the majority of the short-term movement, I think it's going to be a major shift. And a lot of people might choose to pile into the yen in the short term. And if we can let's look at the yen index. And if we just look at how long we've been bearish. So take a look at the weekly. So the last 3 weeks just engulfed 1, 2, 3, 4, 5, 6, 7, 8, 9. About 9 weeks of bearish action just in 3 weeks. When you look at the size of these bearish candles, ever since we dropped below what I would call the responsible zone for the yen. The responsible zone meaning how low can your currency really get before things start to break in your country? And there is a breaking point. When the rest of the world is doing okay, but you're just going down the drain, it's going to be impossible for you to import goods. The lower your currency gets, it costs more yen to buy the same unit of, let's say, a US good than it did back here. So, for example, like if the currency just keeps getting weaker and weaker, you need way more. Let's say it costs 1,000 yen. Now you need 1,400 yen just to buy the same exact thing. And that's what's been happening to their currency. But now, if you can see the slow drive down, this is from their central bank causing this deliberate sell to the downside. And then as soon as this news was announced, I think this is a central bank move, maybe not from their central bank, just their central bank, but from global central banks saying, okay, this is a good discount to buy the yen rally. And I think this yen rally is actually going to last all the way back up, which means sell USD JPY, Euro JPY. We're going to see a retracement on those JPY pairs. GBP, JPY, those of you guys trading that. So that's why the Bank of Japan news is so important. Is this thing going to just rocket and then break through this zone? And we're actually going to see a historic level swing trade? Or, are they just signaling the same way they always do? Hey, I think we're going to hike rates, and they never actually fucking do it. And this is just going to be a chance for central banks to buy the dip on the yen. And then after they release the news, we continue to the downside. I'm with that scenario. All right. They can't afford to shift their policy. I don't care what anyone says. I've been writing about this on the Chart Addicts website for years, in the blogs and the analysis. When you have a crisis where your country's demographics, you don't have enough young people to run your economy, the rest of the world has way better investments to make than buying the yen. So they can buy oil, they can buy Saudi Aramco, right? They can invest in sovereign wealth funds. They can invest in American index funds. They can invest in crypto, anything but the yen. They were forced to basically invent these bonds out of thin air, print currency, which is basically just like putting in a bunch of numbers and zeros in your balance sheet, and then just exchanging them with each other, which is basically just like giving yourself free money. Like imagine you can go on your computer and just type in a bunch of numbers, and all of a sudden your bank account just grows. Now, at some point, you got to pay that back. Okay. That's the deal. You can go in there and change the zeros whenever you want, but at some point, you got to pay it back. And if you don't, very bad things are going to happen. You don't just go bankrupt. No, no. The country is going to revolt. And so they're just printing, 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 and they're hoping the rest of the world starts cutting soon. And they just trying to, I think that they will try to hold off as long as possible until the rate cutting cycle accelerates, where America starts cutting, and then they don't have to cut rates because it's the whole game is relative to each other. Okay. As long as it's all comparative, you can compare currency to currency and your central bank to central bank. It's not like an absolute thing where if we don't have 2% interest rates, this is going to happen. No, no. If we have two and the rest of the world has two, we're good. If we have two and someone has four, now we can't trade with them. They can't buy our stuff. They get fucked up. They're in a recession. Now Europe's in a recession and it drags everybody down. So all central banks need to be on the same page going into the next 3, 4 months. What are your thoughts on the Agenda 2030? Do you feel like it's scripted leading us? Who's Agenda 2030? Talking about Charles Schwab, the World Economic Forum? Yeah, I think after COVID, everybody woke up. And I think since COVID, there's been a massive conversation that needed to happen and that actually surprisingly is happening about the same media that told us this was true and this was true and this was true. Turns out it wasn't true. The same people 2 weeks ago that told us that Biden was the most capable president that's ever lived and he's cognitively fine and everything now is saying, yep, peace out. He's done. We always knew it. Kamala's the shit. Like Biden was never going to make it. So it's like, I think the world kind of had a wake up moment, which is at first everyone fell for it. Different countries, Australia, Canada specifically, like some countries in Europe really got under this totalitarian sort of rule. But now since then, shout out to Elon buying Twitter, which I think opened the conversation to really be able to hash these things out in real time. People are not going to be able to fall for the same shit. I think the real scheme is, bro, to be honest with you, is people are so informed now with independent media. I think the real play they're going to try to pull is convincing everyone not to be involved in the media and stuff so much, right? Because it doesn't really matter for your life. And I think in the next 5 years, that's really what they're going to try to do because having everything in the open and watching and having people just like use their common sense to be like, yo, that's fucked up. What's happening right here just doesn't make any sense. I don't think they're going to be able to tolerate that much longer. And I genuinely feel like just telling everyone you don't need to be on social media as much is bad for your social health, it's bad for your mental health. Um, you know, politics every day, whatever, and they're going to be able to just basically sway public opinion using media narrative and groupthink. So ideally, people wake up and stay on it, but you get burnt out enough, bro, with work and family and everything. People just stop giving a fuck, and people will sacrifice security for people will sacrifice their privacy for security. So if there's a big enough threat here in America of 15 million immigrants, right? One of them wants to do some wild, if there's enough of a security threat, they'll take a lot of our liberties and people who are just fed up will sacrifice their privacy for security. They'll sacrifice their privacy for efficiency to the private corporations. So Facebook take my data as long as I can message my cousin overseas. And then when the AI stuff happens, it'll be like, okay, yeah, take all of my user data and all the questions I'm feeding so that you can do this thing. So that's their real play. But hopefully everybody here listening, wake the fuck up because it's way too many people out here for them to get away with it. It's like 150 people versus 7 billion. But that's how good the power of story and the power of media and the power of, that's how the group think and ideology and party politics, like my side versus your side. That's how powerful that stuff is, where there's 7 billion people in the world and 150 people convincing everyone of some shit. It's like, Wake the fuck up. Okay. Bank of Japan. I was watching a bunch of videos on the yen, and they were saying if they do rate hikes and the Fed does not rate cut, it would close the interest rate gap between the two countries. Um, Let me think about this for a second. That's a good question. So, if the yen hikes and the Fed stays still, technically, yes. Well, actually, no. The Fed would have to cut because the world is in a cutting cycle. And so, like I said, it's all relative. If the Bank of Canada and the Bank of England, and very soon now the Bank of England's going to have to follow, they're all going to have to start cutting rates. In order for Japan to stimulate their economy, they can't go the other way. They can't start raising interest rates when the people in that country are not borrowing money to start businesses. The whole point of lowering interest rates is like, all right, guys, we're going to make money cheap. Everybody in the economy, go out there, borrow money, and go do something with it. Go hire people, go buy stuff, go invest, go do whatever you got to do. They did that in Japan, but the culture is different than America. America is a capitalist sort of um, entrepreneurially minded culture, but in Japan, it's more of a savings related culture due to risk aversion and risk uh, tolerance. Okay, so if they raise rates, it's going to make it even worse. They're already close to a recession or in a recession. Having low rates is not helping them. If they start raising rates, it's going to crash their economy even more. So they really can't afford to do it. The only thing they can hope for is that the Bank of Japan stays still, keeps doing this smoke signaling BS, and hopes that the global rate cutting cycle happens faster, because that will bridge the gap. If the rest of the world starts cutting rates, that will bridge the gap between them and the yen. Because then they can keep their interest rates low and stimulate their economy a little bit, and the rest of the currencies are not going to be so far. It's called a central bank divergence. There won't be as much divergence between these central banks. Hope that makes sense. Hey, Roy, I brought the master class for July, but you guys rescheduled it. As for customer service, you guys told me the August 2nd, but I see the 26th. Yeah, it's August 26th. I'm not sure who in customer service said that, but hey, man, everybody who scheduled or everyone who registered for the July class, because of the rescheduling, you guys are going to get some pretty cool perks coming out of it. So, if you ask anybody around those extra 3 months of VIP and a few of the other pieces of content that you get for free, it's going to be worth that schedule change. We didn't have a choice. We have a 1,000-person event in Colombia in about a month. And as if the 5,000 person conference in Dubai, the largest conference in the world, wasn't enough. Now we're doing 1,000 in Medellin and 500 in Bogota, in a country I've never been to, in the span of 4 weeks. So we had to reschedule. I want to give the masterclass my full attention because this strategy is that important. And so if it's between rescheduling it or just, doing a half-ass version while we're traveling, not worth it. So that is why we rescheduled, and I appreciate your understanding, and you're going to catch a dub from it. So interest rates being high in Japan is totally different than interest rates being high in the US. For sure. In the US, over 85% of mortgages are on a fixed rate, which means that they actually weren't affected by the interest rate changes. It's not like people were paying more per month. The most affected category for interest rates was bondholders, so pension funds and banks. We saw some bank failures and commercial real estate. Because most commercial real estate, you roll over your loans and they're typically on an adjustable rate, so you can get a lower, loan rate. But when those interest rates go up, you got your monthly payment goes crazy. You might be paying, let's call it 100 grand a month for let's say a lease on 5 or 6 floors of an office building. Now you're paying 180K because the interest rate just jumped on you. So those folks were highly affected. That's why commercial real estate is a big opportunity right now, because a lot of those folks are looking to get out everywhere. San Francisco, New York, DC, everywhere. So it's very different. In the US, it's really just about consumption because most of America relies on credit cards, debt, personal loans, to drive consumption. People aren't borrowing this stuff to go make money. So the high interest rates just basically makes it more expensive for people to borrow. So we see a slowdown in spending, which we saw in the retail numbers and the GDP numbers last week. It showed that people are not borrowing as much on the credit cards and not spending as much. So that makes sense. But in Japan, it's completely different. they need to get some action going. They need these people to have babies and they need them to start making some money. And they had negative interest rates where compared to other currencies, you can get paid to borrow the yen. They tried to pay people to borrow their currency and people still wouldn't do it. So Japan has a very different culture than America. If in America, bro, they made the interest rate zero, we'd had what happened in '08, which is we had the greatest economic recovery of all human history between '08 and 2020, well, 2022 until COVID, or 2020, excuse me. Okay, over there, they have negative interest rates where they're paying people to take the money. And in Japan, they'll go borrow the money and just go save it because they're more of like savings minded culture. So that's why demographics is important. That's why I keep saying that China's not going to overtake the US in terms of GDP. Because, yes, when you look at nominal numbers of GDP growth, when you have 1.4 billion people, yeah, on paper, they're going to produce a lot. But when you look at demographics and you look at resources, it doesn't make sense. The one-child policy completely crushed them because they have old people living longer, better technology and health, and they have not enough young people to run that economy and that machine once those old people are gone. And that is a recipe for disaster. Okay. And so that's why, you know, one thing I'll disagree with Ray Dalio on is going to be that the China takeover. Will it be competitive enough? Yes. Will other currencies try and shift over? Yes. The day that Trump takes office, watch what happens. All talks of BRICS are going to go away. Brazil and some of like those countries that are the biggest economies in that group, but that are also on the fence, they're going to back out so quick. We're not going to be begging Venezuela for oil. We're going to go back and sign a deal with Saudi Arabia. And in the first week of Trump taking office, um, is basically going to reverse all progress made against the dollar supremacy. Now, this is going to be a fucked up 3.5 months, people. You got to think like I said, I made this example before, but I've been with people that have cheated in children's games for no money on the line. Golf, Monopoly, whatever, just cheated. Just slide a hint, grab the fucking 100 from the bank in Monopoly. What do you guys think people are willing to do for all the power in the world? Okay. It's a fucked up 3.5 months. So keep your head on the swivel. The media is going to try to feed you whatever. Black people don't hate white people. White people don't hate black people. All right. Asians don't hate whatever, right? They're going to hit you with that. Women don't hate men, right? If you look at the last 5,000 years, right? It's the only way we're here. Women don't actually hate men. Men don't actually hate women, surprisingly enough. Funny enough, everything men do all comes back to trying to get women. Oh, Roy, that's not true. People have passions and yeah. No, play it all the way through. You played that instrument, played that guitar for what? Right? So you can play that thing at the party. So you can right. So let's just go ahead and just we don't all hate each other. And the media is going to try to make it seem like over the next 3.5 months that everybody hates each other, so they can try to pull these elections, whatever. And yeah, man, see through it. Tell your friends and family, yo, get off the fucking TV set. They don't give a fuck about you. They're running ads and they're making money off you tripping out at the dinner table. But instead of you enjoying your family, now you're tripping out over the TV screen and they don't give a fuck, right? They're getting paid out by God knows who, right? So fucked up 3.5 months, but guess who's going to keep you posted, updated, and on top of all these things? Guess who's going to help you see through the noise and right to the signal? Guess who's going to help you guys navigate this terrain? It's your boy. I'm gonna be right here the entire election season. This is not my first rodeo. I'm more ready for this than I was for anything in my life. So if they think they can play games, welcome to the show. All right. Very formidable opponent here on the stream. We're going to keep an eye on everything election related and how that relates to markets. And let me just give you guys my last thing on the stream, which is my prediction. Trump takes office, tax rates go down. He raises the tax rate on companies like Apple having money overseas and Ireland and other places. So they bring the money back to America, makes crypto a lot more favorable to be building here. So a lot of the crypto companies that are now getting sanctioned in other countries because those people are damn near communists, they're going to come back here, and America is going to basically eat up. Like the last 4 years, we've had stagnation and no growth because all the industries have been crushed. Lena Khan at the CFTC, or not the CFTC, has basically just blocked all mergers and acquisitions for large tech companies. The SEC has crushed every financial related company, especially crypto, with these obscure laws. And as soon as that's all out the way, the rest of the world's going to come rushing back here. GDP is going to take a massive fucking spike to the upside. And guess where NASDAQ's going to go? Can you guys type in the chat where NASDAQ is going to go in a scenario where Trump takes office, releases all the regulations, Lena Khan is fucking gone, and and shit, that was a good one. Lena Khan gone ASAP. And then we have the head of the SEC, Gary Gensler. And I think Bitcoin, or what's it called? Trump said that at the Bitcoin conference. He said, on my first day in office, I will fire Gary Gensler. And you should have seen my reaction on the couch. My brother, he was playing it on the screen. I started jumping up and down the couch. I was like, yo, this guy's a genius. And the crowd, I had never heard a bigger reception for a Trump crowd in my life. Okay. I went to the UFC event here in Miami, 20 years since UFC had come to Miami, and Trump showed up last minute. It was Izzy versus Pereira, the rematch where Izzy came back the champion, right? Masvidal is fighting Covington. Okay. These are Florida champions. This is a heated fight. They've been talking shit for 2 months. Trump walked in. Nobody gave a fuck about the UFC fight, bro. The whole arena was chanting USA, USA. I saw the whole thing, 20,000 people in the Heat arena, right? When he said, I'm going to fire Gary Gensler, bro, I saw people at the Bitcoin conference foaming at the mouth, like rabies in the front. I'm telling you guys, Gary Gensler fucking sucks. I've talked to, I'm not even going to be able to say it on the stream, but I've talked to a lot of major institutions, the largest companies in Forex. You guys can use your imagination. The SEC framework today has stifled innovation in a way that everyone's gone offshore. And now the offshore folks can't really rein it all in. And so they're just going full shut it down or over regulate. And so folks really have nowhere to go. And that's why prices are going to start to go up for prop firms and brokers, and fees and all this stuff will go up because people are going to have to basically register in places that's very expensive. Now, with this new framework in about 3.5 months, let's open the floodgates. Everyone's economic situation is going to get better, just like it was about 4 or 5 years ago. And let's get this show on the road, man. All right, we got semiconductor independence, we got AI revolution, we have crypto innovation, we have so many biomedical technologies, so many things at our fingertips here in the US. Why the fuck is one dude with applesauce for brains stopping the whole show and driving all the US innovation offshore? How did we get here, people? All right, so Orange Man bad, Democrat good. Yeah, I want money, and I want you guys to have money. And let's just cut to the chase here. We know what the deal is. Trump takes office, money is coming. Fact checkers, with an X, Roy Dunia with a check. Just how I like it. Yeah, whatever y'all need me to fact check, man, just let me know. Obviously, I can't cover everything on the stream because it'll drive y'all nuts. But I covered about 50 topics, right? So if there's something specific y'all want me to cover, you see on the news or whatever, I keep my ear to the streets at all times. If I see a major news event, if it's something I don't understand, I'll pick up the phone. I got some old contacts at Merrill. I got some old contacts at Goldman and Wells Fargo Advisors and all these UBS and folks. If I really got to plug in, I'll do it. And if it's that tough for me to figure out, Big Bob Elliott, right? The smartest economic mind of our time. If I can't figure it out, I'm texting Bob, and he's gonna roast me for some kind of chart crime that I made where I'm looking too much in a short time frame, or I'm being too naive about the end of the world and it's gonna happen. It's gonna happen now. And you know, I think we have a pretty good, pretty good eye on what's happening here. So whatever topics you guys want to bring them onto the streams at all times. Make sure to grab your tickets to the FX Summit 2024 conference. Use promo code ChartAddicts. 114 days away. Time is flying. Time is flying. That's about 4 months. That's less than 4 months. We're getting to gear up. Columbia event will be August 23rd. All right, so that's the date that we're waiting for. So August 20th to the 23rd, we're gonna have an event in Medellin and in Bogota. And then in September, I want to say the second week of September, we're gonna start the Europe tour. So if you guys are in Manchester, Dublin, Liverpool, London, Lisbon, uh, Madrid, Barcelona, Dubai, make sure to head over to the chart or the FX Summit website and register for all of those events. The events page will be available starting this week. You can go to the city of your choice, register for those events, put your name on the list. And if you're one of the first 100 registrants, you will have free access. Everybody else, it'll be a paid event. All right. Catch us coming to a city near you soon. Last NASDAQ Masterclass is going to be in about a month as well. Make sure to head over to the link in the description. See you guys tomorrow morning for the live stream. Let's make some money, people. NASDAQ loading up. tomorrow is just about as easy as it can get. Everyone's going to be like, "Oh, it's going to fly," right? So that's how people talk, right? That's how the baby pips traders sound in my head. "Oh, dude, it's going to break out. It's going to fly," right? And then what's going to happen is it's going to do a false break because Mike, last week you said it hit the 8-8. No, it did not, brother. If you go down to the 5, the body is up here. So now we at that. So this is the 78 false, which confirmed the whole Fibonacci sequence, which is beautiful, right? Thank you for basically making it higher probability for me. Like I appreciate the right, the added confirmation. And so now we can see that move to the downside. And let's look at one more thing. Has that low been retested? 78 false flag again. So could we see that Geronimo and then push up? I think so. And the whole time, it's exactly what I told Christine. Oh, it's almost like the master class was worth the money, right? God, sons of motherfucking. This thing is. All right. So it can't get any easier. I'm gonna wake up tomorrow. I'm gonna do my morning routine. I'm gonna hit the gym. I'm gonna check the charts before I hit the gym. It's probably gonna still be consolidating right around this level, kind of making its peak up. Like, oh, we're gonna fly. We're gonna fly. Make sure you buy it before you go to work. When you're in traffic, make sure you buy it. And then I'm gonna go to the gym. I'm gonna get a mean workout in, and then I'm gonna come back. It's gonna be retracing. I'm gonna be a little bit late to the streams as I always am. People are gonna be in the comment section saying Nasdaq is crashing, Nasdaq, because they're on the 5 minute chart. And then we're going to basically wait an hour after market open, and then it's going to retrace down to that entry that I just told you guys, whatever that price was. And we'll find it tomorrow morning because it's going to take me about 30 seconds. And then we're going to take the trade right at about 10:15 to 10:30 a.m. I'm going to hope to be out in about an hour at TP1. And if you guys want to overstay, you're welcome. Help yourself. Grab some tea. Fucking grab some tissues too for when that shit reverses on you. You feel me? All right, because we're gonna be out the markets, bagged up, and withdrawals already set in. If that hurts your feelings, good. Wake up. This ain't the Weenie Hut Junior. It's the Chart Addicts live streams. So congratulations, you guys made it to the right place. Make sure to hit like and subscribe. There's a lot of you guys on the stream to not hit like, and that was a lot of value in a short amount of time at a very late hour during everybody's asleep at the Airbnb. I'm about to get yelled at for the tone. I started off whispering. Let's just say they've been hearing me. All right. Let's just say I'm gonna have to deal with this the second I turn off the stream and open that door. Let's just say, bro, I thought you said you were gonna stream tonight. All right. Let's just say I did this for us. Okay. Let's just say I did this for us because this is about to be a fucked up night, and and I did it. All right, y'all.